Good day. This is the Eye of the Storm podcast with the big picture technical update for the NASDAQ 100 being recorded on Saturday, May the 4th, 2024. It basically was a fair week for the NASDAQ. I had a couple of nice up days, courtesy of Apple, which was the big weight last week. Along with, we had the Fed on Wednesday, and we had Amazon and AMD on Tuesday. So it's been a good week for the NASDAQ, but better for the NASDAQ in terms of, I think that the market is making it a little bit more clear of what its intentions are over the next, I'm going to say 2.5, 3 weeks until NVIDIA reports. And we actually get through May expiration, which is May the 17th. Typically in the month of May, markets tend to decline. But I think in this month, I think it's going to be a coin toss because what I'm presenting today would suggest that we go up. But it could happen quickly and then have some cycle work or cycles that are going to top out and start to put stronger downside pressure on the market may kick in. And it's not necessarily that cycle lows, which are now due, we have some that should cycle low late May into June. And so we just had late April into May. And that pretty much now we've got an up cycle going, but it's against another down cycle with a little bit more power because it's bigger. It's a bigger cycle, but it has more patience. So we've got a lot still going on, but the market now has put in enough upside and given enough, I don't want to say hard evidence, but I'm going to say at least decent technical evidence that an upward bias is going to remain, and flip it to the B version, the more bullish version of what I have been presenting for the last couple of weeks. Now, all that really essentially means, folks, is that the A version, which was the more bearish version, that was the one where this was the high. That was it. We're working our way lower. Then that has been relegated back to alternate view. Then my preferred view is what was remaining, which is the B version, which would show that we do go up. We make an additional new all-time high, and then put in the balance so that instead of being all done with minor fifth wave and intermediate wave C, etc., we are finished at that low on April the 19th, 18th, the 19th. We then put in the low for minor wave 4. Now, what that suggests, this is the daily, so here it is, the whole longer term picture. There's primary wave A back in October of 2022. Intermediate wave B, so we have an A and a B, intermediate wave B was October of 2023. By the way, these are interesting patterns for the NASDAQ. When we see that this wave, or we saw the wave up, as that being the result, when did that top? That topped in August of 2022. Then it dropped into October. And then when did it top again? July of 2023 ran down to October. When can it top again? Could we go out into June? We could, and then it would just be a slight corrective phase going into the end of May. And then we rally back up in June. And do we reach this highs? Very possible. So cycles could work out, and then so that May low may coincide in the market as being a part of a much smaller corrective phase, like maybe a small fourth wave, maybe a small minute 4. All right, coming down off there, let's go to the 4-hour chart. And so we can see there's the B, 1, 2, 3, 4. Open that up. This is the 3, A, B, C, 4. Bring it into focus just a little. And then here we are, cash market, gap. We've had a couple of gaps here, courtesy of Google and courtesy of Apple. Now, so the bigger players, all showing that they basically had decent earnings. They have a large cash hoard. Apple's going to be buying back some stock. I believe Google's going to buy back some stock. So money is being spent on taking shares out of circulation and taking some money off the boards. Now, what do we got? If I'm counting this correctly, I'm assuming already, see, this is only 3, and it can't be anything but, because then this was too far down and just really annihilated everything. So if anything, it's an ABC A, B, and we're in a C wave, still out there. But under this count, ABC wave 1, ABC wave 2, forming a diagonal. Now, it's a little bit hard to see right now because all I have are these. I'll put them in and put that there. And you can see it's got a very strong trajectory. In this one, I'd have to put it all the way down to here and then connect it here. Now, that would change. That would change dramatically. So slight expanding fits, but I'm waiting for the top of wave 3. Then this goes away and it goes connect 1 to 3. If 3 comes all the way up to here, then you can see it'll angle and it'll be more expanding. 2 then connects to 4. So I got to wait for this to go up, finish, and then come back into 4. And then I can put in my lower boundary, which also I would assume is going to maybe angle and make it a little bit wider, that we're looking for that 5th wave. So, right, so I got a lot going on and still got to wait for all of this to play out. So we have 1, we have 2. Now, what do we have? First thing I had was the fibs for minor wave 5. Minor wave 5's nearest cousin or closest friend is minor wave 1. So we take the distance of minor 1, or basically on a fib level, you're comparing wave 5 to wave 1. That's the relationship. So, and the most popular, or the most popular one is equality. And equality is at 19,035. That's basis the cash market. That is where minor wave 5 would equal minor wave 1. You have equality, 19,035 in the cash. Now, right above that, reinstituted and yet to be reached, is the primary B Fibonacci level, where if it went more full in terms of irregular B wave, that comes in at 19,181. And 1.382 is just the second fib level that Elliott developed and gave us and passed down through all the years in an irregular situation. The deal is that it's an irregular 4th wave. It's an internal B wave within a cycle 4th wave. It is bigger, and it has exceeded all-time highs by a substantial amount, 0.236 and 0.382 to be exact. So if we take the 100% and then add the balance, this is where we are. Is it out of the normal? Is it breaking any of the rules? No. But everybody wants to think this deep into new all-time highs. Really, it leads to a much stronger upside move. And that may be possible. I have to be honest, it is possible. But not to the moon, folks. Not to the moon. Even if I'm looking at this off of that 2022 low, if I'm looking at that as a 5-wave sequence up, then we're still finishing a 3rd wave, going to get a bigger wave 4, and then yet come back again. And how far above current highs we get to be determined. But the ultimate, even after that, is that a major correction. So if anything, I err on the timing, and I may err on 1 wave. In terms of that, what we're finishing here would be a 3rd, we come down in a 4th, and we still have a larger 5th to do. Now, that would change this irregular B wave. But right now, I'm getting a lot of other internals which are swirling around saying it fits, it fits, it fits, the characteristics of a B wave. As large as it is, the characteristics are still there. It still fits. And on the internals, in a lot of those impulsive sections, it fit. It fit that the 3rd was strong, and there were good reason. but within the context of where we sat. What truly has been problematic since that October 2022 low, which was based on no more interest rate hikes, right? Interest rates are coming down. We're going to start cutting. We're going to start relaxing. We're going to get, it's all good now. And that was the start of that rally. Please go and study what B waves characteristically are. And then, and I'm not saying that I'm 100% right, folks, but people are now saying, oh, how quickly you switch. It's like I'm not switching from anything. I have a long-term view. I will trade. That's what's most important that I want to say right now. I will trade. My intent is to trade what the market gives. Why? Well, because my objective is, you want to earn a living? You don't have to be right on your big term call. You just have to get in there and be able to read the moves and the intraday moves and make more money than you give and do it on a consistent basis. Hence day trading. Even options trades. There are a lot of smart option trades that you're taking advantage of premium. Not, gee, is this a great company and it's going to the moon? You still could be doing that, but taking advantage of premium in that particular instrument. Now, back to what the NDX is doing. Here we are, determining that we're in a minor fifth wave up. Expectations would be that it should break to a new high. In the cash market, that would be above 18,465. That's what I'm looking for wave 5. Well, the high thus far, as it develops, is 17,927. There's a lot more to go. Now, nope, it hasn't broken that level that I spoke of, which is 18,000. 18,002 to be exact. Break above that, then for sure, 4's in place, and this is going to work out to be 5 waves up, whether they're all 3s or whether it actually comes in some other form. Now, counting in that fashion, we're inside this 3. I can bring it down to the hourly, and we can take a look there a little bit cleaner, right? So we come down, ABC, boom, 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 2, right? It did put in a slight new low, and I went with it. A, B up to the top, C slam dunk down, and put in the 2. Now we're off. 1, 2, 3, 4. We got the 5. That should be wave A of 3. Then we come down in 3, go back up in 5, and maybe get up to here, which is start to make in the decent size. That's a good move. We could put a 3 on it. We come back down, and once again, we start heading up in a 5. So you can see it's like, yeah, these are possible. But remember, 18,000. All right. I'll go back out. Let me get back out to that high. What does it need to break? 18,465. So here's not going to do it. What's my next level? 100%. Or anything above 18,465. As far as the structure goes, I need to be able to count 5 waves. And if I'm counting it as a diagonal, it should wedge. And waves 1, 3, and 5 will be 3-wave patterns. But the A and the C part will also be, it'll be a 5, 3, 5. 5, 3, 5. That's what I'm saying. If we get down to that hourly chart again, and we're going up, oh, okay, that's the 2, and I got a 1, 2, 3, 4. I got a 5. That's just the A wave. Come down in a 3, go back up in a 5, a 5, 3, 5. Puts in the 3rd wave. We come back down in 3, go back up in a 5, 3, 5, and hopefully end somewhere up close to here. That would be the ticket. Moving averages. Look at what's happening very quickly. Isn't that nice? That's the hourly. If I move up to the 4-hour, we'll see differently. But how quick that gap really lit the fire under the 13 and the 20 moving average. These are EMAs. Then the 50 also is trying to hightail it, get itself back above the 200. If that occurs, then on an hourly basis, market is in alignment to rise. So you take it back out, you'll see that the pattern is starting, going out to the 4-hour. Yeah, we've got it where the 50 came down, crossed underneath the 200 to set up a downside slaughter. Nope, changes mind, arcing, coming back higher. The 13 and the 20 quickly moving to get above the 200 and the 50, 4-hour chart getting ready to turn, I would say, in a stronger bullish fashion for the move up. Now, that would mean we have to continue. If it falters and turns, these go flat. As long as they hang together, it would continue to suggest support. And you can put that like 17,612, 1520, all in that level. That should be an area of support if the market is in a decision posture. Otherwise, I'm looking for that to break and to give a boost to the buying. And what also could be at play here, now just to toss in a little bit extra stuff, that, I look at options flows. I'm an ex-options market maker. Well, right now, they're very important. How and where the market is moving, and moving large sums of money based on tons of different metrics. We have volatility trading going on, right? The VIX, this is the index. It is purchase and sale. You can sell it. And a lot of firms, big firms, short this, take that money and invest in all of this. So in other words, it's dispersion. They're selling the VIX as an index, as a cash index. They receive the money, and then they use that money to buy the volatility inside of the underlying. And it's a self-fulfilling, right? Lower vol if the market's going to go up. The fear factor lowers, right? Complacency. So there's no reason to pop vol up to 15 or 16 or 17 because we're really not fearing that the market's going to head lower right now. Look, we're up nice. We've got great earnings. But what happens is when you're trading options, volatility equals, you can put big equal signs, premium. So lower volatility, less premium. Makes more sense to be buyers of the premium versus selling the premium. If the volatility gets low enough, because your anticipation or your expectation would be that the volatility pops. And often it does. And so you're going to want to have that position versus the other side. Now, being that everyone's pushing in, it doesn't become a self-fulfilling prophecy, because as a dealer, someone who buys and sells options to those that come into their assigned area, so to speak, they come in, I sell you that call. That makes me, I must go out and hedge that position, and I hedge it by buying the underlying AE, NVIDIA, Apple, any of them, or any of the ETFs. So enough money is swinging around. Then you have the volatility instruments. And then there are the different factors that move into, well, what happens in volatility and how does that switch and change my delta position in the market? And then you have gamma that also will register as to how does that change in my delta? So what if there's a move in the gamma? How does that change my delta? What if there's a move in the volatility? How does that change both? And those are computable. Those are programmable. And so all of the instrumentation gets it, receives it, and acts. And we get big trades and we get market moves. So as long as we're going to head higher, then we need to just pay attention to what the flows are. And right now the flows are coming back into here. And I would think that NVIDIA, SMCI, Meta caught a really strong bid on Friday. Now, again, what are we working for? We're working for next Friday's expiration. And then the Friday after, that's the May expiration. Not as big. The big expiration, here's the ticket, folks. The biggest expiration right now, before the official summer, I guess, right, is June. The June expiration is pretty big. So I think there are a lot of yeah, I guess whoever. Traders are like, okay, we're just going to the June position and then we're taking time. Maybe it goes slow. Maybe it goes really summer doldrums, as they call it. So opportunity knocks in that we pay attention and catch these moves because there's going to be a lot to play. There are a lot of players in the market. There's a lot of money being shifted around. So I'm hoping, and if it's coming in the bullish fashion, so be it. So be it. Trade it. I'm going to. And I'm not going to be out there like, well, you were bearish, you were bullish. It's like I am not. I'm presenting a very bullish picture. Does that mean I'm bullish? It's like, well, for maybe Monday, Tuesday, Wednesday, Thursday, Friday, yep, I will be. Whatever the market's going to tell me, I'm going to go follow the bouncing money. Now, that's the NDX. Let's go over and take a look at the NQ and fill in these blanks. I'm sorry, I tend to react mentally to a lot of the comments that I get. And I want to make sure, because there's so much going on, and all we need to do is pay attention if indeed your goal is to be trading. Then trade. And there's a lot going on intraday, and yes, people are walking away with very large sums of money. That's been my gig, folks. There is a lot of money being thrown around between different instruments by bigger players. And let me just show you an analogy, or share an analogy. I'm like a gnat on an elephant's butt. And the elephant is the one charging through the jungle, searching for water, clearing the path that me, as the little gnat, I just absolutely have not the strength to do it. But I'm going to sit on that elephant's fur, body, or butt until I'm, okay, time to get off. And I just kind of flit and go on to the next one. With that in mind, that's what I'm talking about. Why do I need to ignore these bigger players? Because, gee, the market needs to go up because I'm sitting long some stock of the day. So truly, it's just pay attention and trade along. Now, in the futures market, we're filled in a little bit better because the market actually trades 23 hours a day, Monday through Friday, basically. So here we have minor wave 4 coming up in 5. Got a little bit different. You can see still, but there's still that little bit of an expansion. And see how nice this now looks without that fact that we got the Apple move which the NDX didn't, because it gapped right after hours. So we're down here at 2, and it could be 1, 2, 3, 4, 5, A, or 1, but I doubt. I think it's 1, 2, or 1, 2, 1, 2, 3, 4, 5, or 3, 4, 5. So there's that, and then that's just the first A of 3, and then we have a B of 3, and then we have another C of 3. So remember, that's the high, 18,709. That's the high. That's what's going to have to be broken, and for the structure to be 5 waves before we could call it complete. We may only get up that high. We could certainly get up to 18,738, all before NVIDIA even reports. They start to run this stock, folks. They start to run it, and it's already just sitting below 900. Oh, what was it a week ago? Trading below 800. So there's enough volatility. There's enough for everybody to do. So yeah, could it go to 900? Could it go to 1,000? Sure could. Enough money gets pumped into it via all the different vehicles where NVIDIA sits and draws attention. So a lot of money coming in and out. So yes, the market can get there, and there's the path. And remember, no matter how I'm going to count this, 1, 2, 1, 2, 3, 4, 5, or 3, 4, 5, or is it 1, 2, 3, 4, 5? It's still both going to be just the first leg of wave 3. We got to do a 3 wave down, and we do a second leg of wave 3. So it might only get to here, then I get a second, then it goes again. So there are several interpretations of a 4-hour chart. Is it going to move greatly, or is it going to hang out here, go up a little bit, come back down in 3, and then rally again Monday, Tuesday, or Wednesday? These are all possible, but that's the path I am envisioning. And I'm going to come down. You could take it down to a 1-hour chart. You're going to have to come up with the same thing, a little bit different, right? 1, 2. Okay, 1, 2, 3, 4. We're up to 5. There, we're going to get ready to put the 3 in. We got a 4 and a 5. And there you got a little bit more off the hourly chart. Then you can come down. You can just keep moving this down, and you're going to come up with your picture. You need to put up 5 from here. And the third can be its own 5. So if this is 1, 2, and then 1, 2, 3, 4, 5, of 3, 4, 5. And that's just of this 3. Where could we be? Up here. For sure you can be up here. The NASDAQ was up 375 on Friday. Yep, it was into an expiration, but still it was up 375 on Friday. And a great deal of that was Apple. If they decide, okay, that was good, expiration, they wanted it down there, and now they had their way. And here comes everybody who's now going to be re-up. Get back in, get back in. Apple's going to 200. Okay. I don't care. Let's just trade it. So the possibilities are there. My bigger, longer term position has not changed. Has not changed. Whatever this is, there's the A. I'm going to stick a B on top of it. And I'll be looking for this thing to swing lower. Cycle basis now. Let's check out cycles and see what I got going on. I got the NASDAQ, and on the weekly, that's the weekly. So on the daily, there's a lot of them pointed it. The low came in as expected, but slightly early for April. That we're looking like late April, early May. So now that tighter cycle, which is the monthly, is in an upswing. Now we have the 3-month cycle topping and now in a downswing. We have the month of May, which is notoriously lower. A lot we see more selling. So how's that going to sit against what I'm looking for? I think that we still have some upside pressure. And again, NVIDIA plus whoever chooses to go with it, it may have to carry other areas of the market being sold. Remember, this is not suggesting a major low in the market. It's a cycle trough before it launches again. So we're looking for the cycles, both the shorter term and the little bit longer term, and then I'll go look at the weekly, to come into a low, a cycle trough, end of May, beginning of June. Then again, when I look at the weekly cycles, we have that coming in, and it can come in mid-May to June, and then rise again. And we have one cycle coming in August, and then we have that longer term that is actually a 6-month, of course, coming in much later, November, October, November. So those cycles, those are pretty good. And the 2 cycles will sync with each other in mid-May. So the weekly and the daily will sync up in mid to late May. And so that's what we have. And then we go into an upcycle, and then one comes down mid-August, and the other one goes all the way. But starts to turn, same time, reaches a peak when the other one reaches a low, and then they carry each other. All right, so we have a lot. But I'm going to try to be adding a lot. And there's many different types of traders. Now, one I actually got a chance to talk to today on Saturday. Brent, it was really great. Short, sweet, but I enjoyed it. And that's important information that we exchange with one another about how we trade and what becomes important. And with that in mind, folks, and I'm going to just begin this conversation, I am looking to change how I do and present my thoughts. And there's several reasons, but just say that it's in the works. But it's going to be more fitting, I think, for more people because there's so many things that happen during the day that are traceable, that are workable, and provide opportunities. And so that's kind of where I want to start to go versus, oh, I'm bullish and bearish and I'm looking for this high, or I'm always looking for new lows, or you're always this. No, I'm trading. And so what I'm kind of getting an interest in is other people that are trading every day, whether they are swing, whether they're day, position, volatility, gamma, whatever your gig is, that's where I'm headed. Because there's so much to trade and there's so much to do that it's just present the picture and move. So I'm going to end it there because I've now talked long enough. But keep in mind that change, I believe, is coming. So the next week, by the way, for numbers, economic numbers, very, very slight. It's the week after that we get PPI and CPI. So the next Elliott Wave update is going to be on Monday, May the 6th. I wish everybody a really great balance of the weekend, and I will be back on Monday.